Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock with news, markets are brushing off signs of rising financial risk, preferring to accent the positives. They are aided by some generally hawkish central bank comments. But first in the US, their debt ceiling negotiations have come down to the wire, with a traditional bipartisan resolution now very unlikely. The Democrats will have to do it on their own. Meanwhile, new US initial jobless claims rose last week to 306,000 in a surprise bounce. The total number of people on these claims rose also, up to 2.5 million. It was also an unexpected rise. The August report by the Chicago Fed of the National Activity Index notes that a slowing economic expansion, even if it's still expanding well above average. And the Kansas City Fed factory survey backs that up, reporting a good but slowing expansion. But cost and price rises remain very high, they said. These reports reinforce the latest PMI reports for the US and its factory sector, a fast expansion, but just not as fast in September as in August, except for costs and prices, which were reported as rising faster. In the services sector, the overall picture is very similar. Costs are a problem there too, but optimism is rising there faster. New June data out for the US Fed shows that American household net worth hit a record high of $142 trillion, up 20% in a year, and driven by surging home values. In China, it looks like the Evergrande crisis hasn't passed after all. There are reports that Beijing has decided to let the company fail and is racing to prepare all its national and local agencies to brace themselves for the possible storm and wait to handle the aftermath of the failure rather than preventing it from happening. And China is also facing up to some sharp but regional output cutbacks amid a shortage of electricity supply as authorities respond to Beijing's directions to achieve targets for lower overall energy use. They need to act now so they aren't embarrassed in the coming winter surge. And the US Treasury 10-year yield opens the day up sharply to just under 1.40%, and 9 basis points higher from this time yesterday. And the price of gold will start today down sharply, down $24 to $1,752 an ounce. But oil prices have moved higher again overnight compared with yesterday's levels and are up $1 to just on $73 a barrel in the US, while the international Brent price is even higher at $76.50 a barrel. And the Kiwi dollar opens today at just on 70.8 US cents and more than a half a cent firmer from this time yesterday. Against the Australian dollar, we're a little changed at just on 96.9 Australian cents, and against the euro, we're up 40 basis points to 60.3 euro cents. That means our trade-weighted index starts today at 74.1 and back to the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.